Hello viewers, how are you? Welcome again to my channel. Buying a house in Australia, especially in WA, in Western Australia, has become incredibly impossible in recent 3-4 years. The demographic and economic landscape has changed significantly, making home ownership more challenging. But don't you worry, as I promised in my previous video, I will tell you how much is required to buy a house in Australia. So today we are going to answer a question: how much of deposit you actually need to save before you go to buy a house. So the good news is whatever I tell you today is going to apply to all of the developed countries, whether it's America, Germany, whatever developed countries, right? So before we go on that, let's ask one basic question. Do we really need any help for buying a home? Yes, of course. If you are ultra rich, then you will flip your fingers like this and a lot of money will come to you. But if you are a normal person like me, then yes, you need to at least think for several years and save for a couple of years to enter into a house in Australia. So today we would focus on a house which is priced at $500,000 and all our calculations will be based on that price. So if you are buying above that price or below that price, you can adjust your calculations based on that. Let's break down this amount. Nobody carries this big amount into their pocket. First is deposit, another is loan. So majorly deposit is you and loan is bank. Some part of this money you will pay to the seller of the house, and the remaining part, which is called as a loan, the bank is going to pay on your behalf to the seller. Right now seller is out from the picture. Now who is left? You and bank. So the deposit amount would actually varies on many scenarios. It depends on your financial health and it could depend on the bank's requirement as well. So first let's consider it from the bank side. So if you go for a less than 20% of the deposit, so that would become 100,000, then the bank is going to treat you as a weak customer. Pay attention to this, weak customer. So it's a jungle rule there, right? So bank thinks weak, hunt, attack, because you are still a meat for them. They will not straight away deny to you. They will say, okay, you are welcome, buy this home, give us less than 20%, but because you are weaker, so we have to buy an insurance for you so that you can actually pay our money to us. And that insurance is called LMI. That is a big word. And that could be in couple of $1,000. So it could be a significant amount. And I will tell you in the other video like how LMI can make a big hole into your pocket, but in the next video, because if I continue LMI in this video, the video would be very long. LMI in itself is a big thing to understand. So from here you got one thing, like if you want to save LMI, then you should have at least 20%. That is majority of the banks. That is the condition of majority of the banks. But I think I forgot to tell you one thing, that even if you are giving 20%, bank is not going to trust you at all. They are still going to charge an insurance, but that is not called LMI. That is simply an insurance. Bank buys that insurance for you so that in future if something happens to you and you are unable to pay that loan, bank can claim that money from the insurance company. And do you know who pays that premium? You. That insurance thing is added onto your loan amount. I hope you know this. If you have bought a house already, you should be knowing this. This is very, very important. But the thing is, you cannot do much because you are helpless. Because you are going to take money from someone. So they will do what they want. Okay. So if they are charging this, you can go to a different bank and tell them, okay, I don't want to give this. So, but if they happy with your conditions, with your financial health, they will give you loan. Otherwise, they will say, okay, nah, the other bank is doing right, so we will also take this. This is compulsory, this is mandatory, this is policy. They will tell you so many reasons and you have to give it. Moving ahead, how low you can go on your deposit. So generally there is a thumb rule of 20%, right? But in Australia, the government helps the first home buyers to enter into the market. So some government policies allow 2 to 5% of the deposit. So why that is so? Because government comes to your bank and say, okay, you enter into a home and we will guarantee the bank that this man will repay your all amount. So there are many policies like Key Starts and others. You can research on the internet, but if you don't know, you comment me, I'll tell you. Right? Next. But keep in mind, those government-backed policies are only for people whose financial health is weak. That means either they are low-income families or they are first home buyers. You should read the eligibility criteria and then go to those schemes. In addition to just that scheme, government also supports first home buyers to take home. How? Government will not charge stamp duty. So this is another charge when you buy home, which most of the people don't calculate, stamp duty. So if you are a first home buyer, that means you don't have to give the stamp duty to the government. But there is a catch. The price of the house should be under a certain limit. Again, if you want to know that limit, comment me and I'll reply you or make another video. So when I came to Australia, I bought a house. I didn't give any stamp duty and I received a grant of $10,000. Mind it, this grant keeps changing with the government policies. Always check on the government website that how much is the first home owner grant at the moment. Right now, coming to reality of saving a deposit. Because of the government, I won't comment. But I will tell you so that you can infer from that what I'm trying to say. So let's say you earn 100,000. However, this 100,000 is quite high than the regular Australian. Let's consider flat 30% tax. That means you will be just left with 70,000, right? And according to bank nowadays, because of inflation and that all the wars going into the world, Australian governments and bank has decided if the person has a family with 2 kids, then the average normal expenditure of that house is $4,000 to $5,000 a month. That means out of the 70,000, if you take another 50 or 60,000 from that, then how much you will have? 10,000, maximum 20,000. That means if you are saving $20,000 and every year, it means you need 5 years to save your 20% deposit. Isn't it great? 5 years. But you don't know one thing. In those 5 years, when that property which you are trying to buy was for 500,000, but after 5 years, that property has gone to $1 million. That means you are still below your target. So you save again and the property rises again. You still below, you save again, still the property rises. And some people are so unlucky that they never reach their goal. But don't you worry, I've got you covered. I'll tell you some tricks and things so that you can enter into real estate market. You can own a dream home. Come on, comment me and let me know where you are stuck. How can I help you?